All right, guys, want to get started here. Good afternoon. It is 3:25 p.m. on Saturday, March 7th, 2020. Hope everybody's doing well. Hope you had a great week. I am making an attempt here at doing these live streams. And even if you're not watching it live, it'll be posted to my channel afterwards. So if you're just watching for the first time, make sure you hit the subscribe button that you see down in the lower right corner of the screen if you have not already subscribed to the channel, and then hit the little bell notification so that whenever I post a new video, you'll be notified right away. So in terms of last week, we had another really volatile week in terms of a lot of risk-off sentiment. The coronavirus still was dominating the market. Although we had a fair amount of news last week. Let's see. Let me just go back to the news calendar. We had a pretty loaded up news calendar, including FOMC. The Federal Reserve had a cut 50 basis points on Tuesday unexpectedly, and so that stressed out the U.S. dollar. And then we did have a Canadian a Bank of Canada rate statement on Wednesday, and the BOC did cut rates also 50 points, which was larger than expected, and the statement was pretty dovish. And then on Friday, we had kind of a mixed bag for the Canadian trade news, employment news. It actually was pretty positive, but the Canadian dollar really did not rally. And the reason why it didn't rally is because the Bank of Canada 2 days ago had cut rates by 50 basis points and was pretty negative ahead of the coronavirus. So that's why we didn't see the Canadian dollar really rally out of that much. The U.S. dollar, pretty much the same thing. It was a really good non-farm payroll report. Kind of blew everything away. Jobs were much higher than expected. Average hourly earnings came in as expected. The unemployment rate went down another tenth of a point. This is like a 50-year low. So it was overall good news, but it just proves the market really was focused on still on the risk-off sentiment with coronavirus. And again, if you're not sure what risk-on, risk-off is, you can Google it. But essentially what happens is when the market is really nervous, it tends to go away from quote-unquote more risky assets. In Forex, that would be like the New Zealand dollar, the Australian dollar, maybe even the Canadian dollar. And it will flow more into quote-unquote safe assets, which would include especially the Swiss franc and the Japanese yen, but also can include the U.S. dollar and even the euro. And we did see the euro go up this week. I think there was a little bit more flow. The European Central Bank folks were basically have been very resistant to doing any more financial easing right now, and so the market kind of took that as positive. And so we did see some flows into the euro too, and the U.S. dollar, was really kind of a mixed bag. But the story for the week, guys, was to trade basically, any Aussie yen, Aussie Swiss, all these pairs were just continue to be down. The euro yen was kind of an exception because although it did go down, it wasn't as kind of straight down as the some of these other pairs were. But the Kiwi yen, Kiwi Swiss, just really straight down. The dollar yen. Okay, I mean, this is the dollar yen. Look at the 6-hour chart here. I mean, just straight down. Okay, dollar Swiss, same thing. All this basically on the back of the strength of the safe haven flows into the Swiss and the yen. This was non-farm payroll. This was the candle for NFP on Friday. It caused a little spike up because it was really good for the dollar, but you can see it just didn't do anything the rest of the day. It just moved sideways. You can see on the oscillator here, we still have made a new low. So again, with this big push up, and it didn't really do anything. Now, if we look at the Canadian, let's look at like the CAD Swiss. Again, Canadian news. Here's the CAD Swiss. Looks just like the U.S. Swiss. We had positive Canadian news, and it just didn't do anything. The market just basically moved sideways the rest of the day and really did nothing. And again, even though there was positive news, you have to understand what, kind of the underlying market force is. And for this, it's all about the global economy and coronavirus, for better or worse. Crude oil prices continue to collapse. We did have crude oil recover, for about a day, but it just went right down again. And of course, falling crude oil prices is going to have a negative impact on the Canadian dollar because that's their chief export. So whenever you're thinking about trading the Canadian pairs, you always want to look at crude oil prices. And the reason, again, with the market, with the global economy expected to take a little bit of a hit because of coronavirus, and therefore oil demand is expected to go down, so oil prices fall, and then the Canadian dollar will fall because of that, okay, because of that's their chief export, okay. So this is even though I don't trade this, I keep an eye on oil prices, at least day to day, and just kind of see, what the trend is. So, but again, dollar yen has showed all these. And so, really, guys, until we get, more positive news in regards to the coronavirus cases peaking or really starting to go down, we're probably not going to have a vaccine of any kind for a while. It could be another year. And really, guys, this whole thing, in my opinion, has been greatly blown out of proportion. Far, far, far more people get sick and die from the flu every year than this thing. It's just that, it kind of came out of nowhere, and, people don't know what to expect, and you have a few deaths, and, but I mean, the statistics are that like 98% of people that get coronavirus will recover fine. The people that are dying, for the most part, especially here in the U.S., are elderly people with that already have health problems, especially, breathing or pulmonary issues, cardiac issues, and those are the same people that if they got the flu, unfortunately, they wouldn't do well with that either. So, but it is what it is, and it has created a lot of chaos in the market, and that's probably going to continue into next week. If we look at before we look at some charts, we just look ahead for news for next week. We don't have a lot on the calendar compared to this past week. I will point out on Monday night during the Asian session, which would be Tuesday morning or Monday night for me in New York, we have Chinese, the CPI. Now it is expected to be down from 5.4 to 5.2. If there's a big miss, I wouldn't be surprised if this is really is down even lower. That's going to continue to push that risk off sentiment. We have Australian business confidence. This will be an interesting one to watch. Not normally a high impact one, but again, because the Aussie's been hit pretty hard by the what's going on in China, since that's a major trading partner, I wouldn't be surprised to see this business confidence number take a hit too. There's no forecast for it, so we'll see if it's worse than negative 0.1. Then that will be interesting. And then we have the RBNZ Governor Orr from the the Royal Bank of New Zealand, Governor Orr speaking also. If he says anything about that or monetary policy, then that will have an impact. And then we jump ahead. We have from Great Britain, we have their annual budget release on Wednesday during the London session. That could have an impact, although the market, for pound traders is really focused on post-Brexit. In terms of what's going on with negotiations with the EU on trade deal. So I have really been staying away from pound pairs. I think the pound will start to get more volatile. Right now it's been a lot of whipsawing and range trading for the most part, outside of the pound yen and pound Swiss, which have been hit by, again, those safe haven flows. But the pound itself is really not doing much because the market's kind of waiting for some news to come out about where the trade negotiations are with the EU. And once that starts to trickle out, I think we'll start seeing the pound move. But in the meantime, at least personally, I've been staying away from pound pairs. So we have dollar CPI on Wednesday during the beginning of the, just before the beginning of the New York session that will come out, and those will be important. Again, we had the very strong NFP employment news Friday, so CPI is always worth watching. And then we have PPI on Thursday. And again, it'll be interesting to see if, any effects of the coronavirus begin to trickle into the U.S. economy, especially with this PPI number. Although I wouldn't expect to see any real major break in those right now. It'd probably take a while. So, but I would say the highlight of the week, at least on the calendar, will be the European Central Bank on Thursday morning will release their monetary policy statement and financing rate. And again, they're not expected to cut rates; they're already at zero. But it'll be interesting to see in the statement in the conference what they say about the global economy and in particular the European economy. Again, they've been very resistant to doing any more quantitative easing or fiscal stimulus right now. And so it'll be interesting to see if they continue with that in their statement and at the press conference. And if they do, then expect the euro to continue to strengthen against the, especially against the majors, but even against the U.S. dollar. But if they don't, and if they shift and become more dovish, then expect the euro to continue down. But again, this past week they didn't give a lot of hint that they were going to want to make any substantive changes, and if they hold to that, then the euro probably will continue to see positive support. So anyways, so that's pretty much it from a news standpoint. I'm going to take a quick look at at a couple of charts. The euro Canadian, off the weak Canadian dollar, you can see this past week it's just straight up, right? Just rocketing straight up. And this is again a combination of weak Canadian dollar primarily, but also on European flows to the euro. Now, if from a pure technical standpoint, if we go to the weekly chart, this is the weekly chart of the euro Canadian. This is pretty bullish right here. See, we've broken above. This looks kind of like a corrective pattern, a big ABC that was broke. That's gone on for let's see how long this went on for. About 2 years. this big old correction's been going on, and now we've broken above there. So personally, I'll be looking to take longs on the euro Canadian. We took a break on Friday and kind of pulling back a little bit, but I'll be looking to buy dips on the euro Canadian again, especially if this risk off sentiment continues. But again, with the euro, it'll be important to see what they say on Thursday. Let's see. If we look at some of these a couple of the pound pairs, just in terms of the risk on, risk off. This is the pound versus the Swiss. We zoom out a little bit here. This is the 12-hour chart. You can see from an Elliott wave count, we're pretty much at the end of a trend here, and it did kind of bounce here on Friday. So I would expect a little short-term bounce, maybe back up to these levels, and then watch it from there. So I'm not going to be trading it, but I'll be watching it. And if the risk-off sentiment continues, I probably, I expect this to continue up and maybe, like I said, get up to at least these levels, and then potentially watch for something else. Pound yen is the same thing. Looks just like the pound Swiss. Again, it's all driven by risk sentiment. Really very little to do with the pound. The pound versus the U.S. dollar. It's the only other one I want to look at. This is a little like the euro Canadian, right? We had this on the daily chart. We had this very clear 5-wave trend ended back here in December, and now we've been kind of boosted. We've been kind of heading down since, and then we had 1, 2, 3. We had 4 really up days, strong pushes up on this pair, and so this might have been the end of the correction. Now we're going higher. I really didn't look at pound pairs much this week. I did not trade any of this, although this is really nice. Now, I suspect what's going to happen, it's going to continue up. When it gets to this trend line, we're going to see selling pressure. We're going to see, technical traders and algos kind of, jump out right here. So expect to see, a pullback potentially around these levels right here. And then, we'll see what happens. But so I'll let it go to this point, and then I expect to see it poke through. And if we get a daily close above this trend line, then this thing's going to go way higher. And at that point, I'll probably look to take a long. But it's only got another probably. Let's see here. Oops. to the top of this. It's got about maybe another 20 to 30 pips before it hits this trend line, so I'm not going to risk 20 or 30 pips. I'll let it get up here, see what happens. We'll probably see a wick spike through, but again, if we get a daily close above this this trend line, then I would look for buys on the pound versus the dollar. So let's see. Let's look at the U.S. versus the Canadian. So go out to the daily here. Looks like we have a completed trend here. 1, 2, 3, 4, 5. Then we had this big red candle down. And of course, if we drop down here, this is basically the dollar news, the non-farm payroll, this green candle. This is the 3-hour chart. Let's go to the 1 hour. This was it here. And again, it just didn't do anything, right? We just kind of went up and then moved sideways. And so this is, that's pretty bearish for the dollar because, quite frankly, that was a really impressive job number. And it just really didn't do anything. We moved sideways the rest of the day. Friday, I didn't take any trades, to be honest. I took no trades on Friday, so in any pair. So I was in a couple that I closed, but I did not take anything new because it just nothing was happening. So so this still looks pretty bearish to me, guys. Push down. Maybe an A, an ABC. Push down, then an ABC correction. Something like, an A, then this is, actually this would be the C here. All right, this would be the B. All right, something like this. And so now this is the C. This is the C up. And, potentially look for this. And of course that would feed into some of these other pairs I was looking at. And we're at the 78.6. We bounced off the 78.6 Fibonacci for several hits here. 1, 2, 3, 4, at least 5 or 6 hits on the 78.6 Fibonacci. So I will be watching the dollar Canadian for a short, for at least a wave C. Now this whole thing might be an A, B, C. Okay, because again, if we go back to the daily, this is a completed 5-wave trend. So this move down could potentially itself just be, this is the A, and this choppy move up is the B, right? So here's the A, here's the B. We move this up here for C, and that means this C would go down. And if it's a C, it'll probably go at least as long as wave A, which is about 145 pips. So off of here, 145 will take us back to somewhere back to around here. So if you did go short, this would be my initial target, be somewhere down here. Okay, so I will be watching the U.S. Canadian for shorts, but I need to see some conclusive price action. Although it's a low risk trade now, you can get in now and just put your stop just above here or just up here, give it a little breathing room, and just see what happens, right? So anyways, that's another one I'll be watching. Kiwi, Canadian. Again, remember the CAD's been really weak, and the Kiwi's been weak. Has not been as weak as the Aussie, and of course this is being driven mostly by the Canadian dollar selling off. But we've it looked like we've made a turn on the daily chart, but I really hesitate going long because as long as coronavirus and this risk-off sentiment continues, then you're kind of fighting a headwind here against the but listen, if we continue to go up here, then hey, I probably will look for some longs in the Kiwi. And speaking of that, with the Kiwi dollar, again, if the dollar continues to weaken, so here we are, this one I actually like better, because here we are, we have this very steep downtrend, and I kind of tried to put a trend line on here. It's not the best one, but especially when it's this steep, I don't really like trend lines. It's just too steep for me. But if you go out a little bit, you can see basically that we broke through it. So now it's coming back. So expect a touch off this trend line. If we hold this and continue up, then the Kiwi dollar could be a buy, especially if we see the risk sentiment begin to quiet down. If the coronavirus news becomes a little less in the news, then expect potentially to see this go up. So I will watch the Kiwi dollar, but I need to see the dollar continue to weaken, and I need to see the risk tone improve before I would think about taking a long. But if it does, it's got a lot of room to run to the upside, obviously. So euro yen continues to sell off. But again, this is all about risk tone right now. It looked like the market was trying to break out. We went up, then we came back down. We shot up again. Now we're down again. And there's a big push and pull going on right now because the euro has been, strengthened, but the yen is continuing to outshadow that. So watch the euro yen for a potential break. If the risk tone improves, watch this to for any breakouts. But for now, it's going to probably continue down a little bit further. And so it's not a pair I'll be trading, but I will be watching for an improvement in the risk tone and potentially see this thing go back up. So euro versus the Aussie, again, this has benefited from safe haven into the euro and the Aussie weakening. And so, we came right up to this high here and we've rejected it. But I will still, again, continue to potentially look for longs in the Aussie. I think this is going to go down a little bit more. But this pair I continue to be somewhat bullish on. But again, remember we have ECB news later this week. And some of this will depend on the risk tone too, because the Aussie will strengthen if the risk tone improves. Although the Aussie fundamentally, even outside of the risk, is bearish. So I continue to watch the Euro Aussie. I did take a few really good trades on this along the way up here, but we've kind of reached some major resistance, and but I'm still kind of bullish on this pair and potentially looking for longs on pullbacks. So Euro Kiwi. So it looks very much like the Euro Aussie, and I have this labeled as an ABC. So potentially that could be what we're looking at on the Euro Aussie too. Is that this whole thing is an ABC. So this could go way down to here. This could be an AB down for C. It could come all the way back to here. So that's why I'm not going to be in any rush to jump back into these, but I will watch. And the same thing on the Euro Kiwi. We had this long run up on the daily chart, but it doesn't look like it's over. I mean, on the daily chart, it looks like maybe this is a 1, 2. This whole thing was a 3. We'll see a little bit of a pullback for 4, maybe a sideways 4, because we had this zigzag 2. So we'll see more of a flat 4 and then up again. And the awesome oscillator on the daily chart here made a new high. So that's why I still remain bullish on both of these pairs, even though they're going down right now. So, or they were as of Friday. But look, I mean, this is Friday afternoon. You can't go by any of this. This is just the market going to sleep for the weekend. People with long positions taking their profits off and closing positions for the weekend, especially with all the risk. People don't want to be holding these trades over the weekend. So these red candles here, really mean nothing to me. This is Friday afternoon, hash and trash. So I'm still bullish on both the Euro Aussie and the Euro Kiwi after these corrections end. So Euro dollar, same thing. Still bullish on the Euro dollar, especially if we do continue to see weakening on the dollar. And again, this looks a lot. If you go out to the weekly chart, we'll let that catch up. You're going to see that same big, long, meandering correction on the weekly chart. So yeah, here it is. So here's the weekly chart. And you could really say you could see a trend right here, right? This is a completed trend. Then we kind of meandering down, little overlapping candles that went on for, this is probably about 2 years. Yeah, this is 2 years. From here to here is 2 years because it's a weekly chart. It's about 104 candles here. But you can see, we've broken out here. So, you can throw a trend line on this if you want. right? It's connected across these, even these most recent highs. We're there, right? So again, I'd be, you know, if the dollar continues to weaken, and as long as the euro is supported, I'd continue to say we're gonna see buying. So euro dollar, I continue to look for longs on strength, on pullbacks to get back into that, especially if the ECB on Thursday comes back and is not as and not too bearish. Maybe we see a little pullback early this week back to this trend line, and then potentially go back up. Okay, and Aussie yen again looks like potentially nearing the end of a trend. This could go down a little bit more, but again, this is all risk dependent. If from a pattern standpoint, it looks like this downtrend is getting a little old. If we go to a daily chart, we've already taken out all these recent lows. So we'll see what happens. I'm not saying this is going to stop going down. It looks like it wants to go down a little bit more. Maybe we come back to these lows again. But if the risk tone, improves, we're going to see a bounce on these. But I would rather, if I'm going to take a bounce on, a risk on one of these yen pairs, I'd be more likely to take it on the Kiwi yen than the Aussie yen, because the Aussie is fundamentally more bearish than the Kiwi. So, all right, so second, guys, I got to take a drink. So, anyways, yeah, so that's about it in terms of pairs. So again, I'm still looking to potentially buy the Euro CAD, Euro Kiwi, Euro Dollar, Euro Aussie, those four in particular on at the end of corrections. Potentially the pound versus the dollar. I think the yen and Swiss pairs, those downtrends may be getting a little old, so we'll see. But I will not be challenging that risk off until I see some definitive change in the news. But some of those downtrends could be getting a little old. Dollar Canadian could see some potential downside. The only problem with dollar Canadian is, if the Canadian stays weak, then it's going to be hard to get a real good momentum push, because if the dollar and the Canadian are weak, two weak currencies, tends to just move sideways, right? It's going to be hard to get a real big push to the downside. But if the risk sentiment improves, then that could, strengthen the Canadian just enough where it could push this down. So this, this is not an ideal pick, because you really need the dollar and the CAD to be very divergent to make this work. But I'm going to keep an eye on it. But again, I would say right now Euro pairs are the ones that I'm watching closest for potential buys heading into next week. If I had to kind of sift it down, I would say Euro pairs, potentially pound versus the dollar, potentially Kiwi or Aussie versus the dollar if the risk tone improves, and let's see what else, and potentially dollar Canadian. So yeah, so that's the thing. And it was a good week. It's a pretty good week, if we look at this is my my FX book. Just my email, but there's nothing here really. You can't see. I buy a lot of stuff on eBay. But yeah, I mean, this was my FX book. I get this email every Friday. You send to me automatically. This is my account on FX book, and you can set like weekly and monthly goals, and I set a weekly goal of 5%. Gaining capital, and I beat that by 237% this week, and a gain of at least 20% in a month, which of course is 5 times 4, and I'm already up 59% for the month. So it's been a good month, and a lot of that is driven by this risk tone. And so I'll continue to try to build on this as the week goes on. So because I do think there'll be more opportunity this week. And again, there's not a lot in the news next week in terms of scheduled news events. So I do think that, outside of the ECB on Thursday, most of the action is going to come from risk sentiment and what's happened with coronavirus and just kind of general market sentiment. That's going to be the main drivers this week because we don't have a lot of scheduled news. Again, outside of the ECB on Thursday being the main one for the week. So I'm going to stop right there. And if there's any questions, feel free to throw them in the chat. And the other thing I wanted to just go over really quick, guys. So I use this sometimes in my videos, and somebody had asked me, like, what is that that you use? So this is called Forex Source. This is, if any of you have ever followed fundamental trading, you may or may not have heard of Jared Davis. He's a trader. He's from England. He's really more involved with hedge fund, with Forex hedge funds and things now. But he's a great entrepreneur too. And he started this, he's always had a lot of training courses and, online schools for learning fundamental analysis. And he launched this service probably about a year ago called Forex Source. And it's kind of like a one-stop shop for everything you need for fundamentals. It's got this news feed, updates pretty much all day. This obviously it's not updating for the weekend, so this was from yesterday. Like opening news, you kind of read through, you get caught up on what's going on in the markets. It's not just Forex, it'll review commodities and stocks and indices too, which may or may not be of interest to you, but obviously the site in general is heavy towards Forex. So it's got these updates that come in at various times during the day. It's got market insights, which is a great tab here. Every day they'll post these on current drivers. So this, really what's pushing each currency right now. And you can open these up and have a quick read about what's the current baseline and what's going to move these currencies. So like when I was talking about, the New Zealand dollar or whatever, you can kind of read these. They have these tradable sentiment shifts. These come out right at the beginning of the London session every day, just giving you some trade ideas and what's driving markets for that trading session and what you might want to think about, upcoming risk event that's scheduled for that day. So it's good stuff. They post video commentary throughout the day. You can see they go on all day. They post these short videos that you can watch and get caught up on what's going on. And again, their analysts will post these all through the trading session. You can see this was just Friday, from starting at right at the beginning of the London session all the way through to about halfway, about 2 hours into the New York session. So these are great. They're all pretty short. This one's only like 2 minutes, so they're all pretty short. And it's just a quick update. They have this currency research tab here where they update these every week, top trading opportunities for the week. I'm sure they're going to update this for the ECB, probably will be what's in focus for next week. And there's a lot of other stuff on here where each currency is fundamentally, and a bunch of other stuff. And they have a live audio squawk. So if you're in front of your computer and something breaks across the wires, you'll hear it squawked out live. When a news release is coming out, you'll get the real-time release across the squawk, so you can react right away if it's a trade you want to take, or you can just keep an ear out if you're in front of your computer about anything that might happen during the day that could be market moving to take advantage of. So that's just a little tiny foot in the water about what this has, but it's great. It's a one-stop shop, honestly. And even if you're not a big trader, this really will get you tuned into fundamentals, and you can add that into your technical arsenal, whatever technical system you use. So if you're interested, I probably will make some future videos just highlighting some more of these particular things. But if you have any questions or interest in Forex Source, leave them in the comments or in the chat. I have some codes for to get it at a cheaper price too. So which is kind of nice. Maybe even up to half price on the monthly subscription. If you're interested. So it's a good site, good stuff, one-stop shop, Forex Source. So I use this every day, especially the sentiment stream is really what I rely on. My two best tabs are the must read and the market insights. These are the two I use the most. And I will keep the squawk on while I'm in front of my computer, which I'm not always, but when I am in front of it, I will put the squawk on and make sure I keep an ear out for anything going on. But like I said, for me, must read and the market insights are the two biggest things. And on Sunday night or Monday, depending when they post it, I'll go to this research and I'll at least read these 4 reports right here, and just to kind of, because they'll update these pretty much every week. It says when they've been updated, and they update these basically about once a week, and so that's really good too. And they do live analysis too, so this is nice. So about 6:30 every morning New York time, which is about noontime London, they will have a live session with one of their analysts, and this is from the last week. So if you missed it, you can click catch up and you can watch it. These go pretty long because there's a lot of Q&A. So they go anywhere from an hour to hour and a half long, but you don't have to stay on. The analyst will go through all the market, bring you up to date what's going on in the market for that day, and possible trading opportunities, and then they will do a lot of Q&A after that. So you can jump in, jump out whenever you want, and if you miss it, you can go back and watch it again. And you can set a reminder, so every morning you'll get an email before it starts, so just to remind you. And you come back to the screen and it'll say watch now instead of catch up, and you click it and it'll just open up the recorded one, and it'll open up live, and there's a chat box. It's real time, it's live, so you can type in questions to the analyst, and they're really good at explaining and answering all the questions. So that's the live analysis that goes on every single day, sometimes long, but like I said, you don't have to stay in the whole time. I get on these about 50% of the time, but like I said, if I'm around and looking at it, I'll jump on while I'm looking at charts, but about half the time I use it. But again, my two biggest things are in the sentiment stream, the must read and the market insight. So I won't beat the dead horse, but if you're interested, it's definitely something to check out. Let me know, and I can post post more information here. So in the comments. So all right. So anyways, guys, I think I'm going to leave it there. My voice is getting worn out, and I'm sure everyone's sick of hearing me. We've been going about 40 minutes or so almost. So I will leave it there, guys. Happy trading next week. Again, guys, things can be really volatile. You can definitely make some good pips during these times, but if you're not practicing good risk management and you're not tuned into what the market's doing, not just technically but fundamentally, it's very dangerous. I mean, you can do really well during these times, but you can really get chewed up. So make sure you stay tuned in, whether you're on Forex Source or whether you're using like a free site like Forex Live, where you can stay tuned in. The Forex Live is a real-time Forex blog. It's really, really good, and it's free. So you don't want to pay for a service, there's an option to come here. And another one's Financial Juice is another one to check out. And this is basically a site that just consolidates links to other sites like FX Street and Forex Live, and it just this is a free site too, and they actually have a squawk too. It's got a slight delay. It's not exactly real time. It's got a few second delay, but it's pretty good. And it's only available from 8 to 4, so it's not going to work during the Asian session, but and it won't work during the first half of the London session. So basically, it's good during the New York session, is when you can use this. Okay, but it's free. You can launch it. You just have to register for a free account, and you'll be good to go. So that's another one I check out. If you don't have the money to pay for a paid service like Forex Source. All right, those are a couple of good ones I've talked about for Financial Juice and Forex Live. So, all right. So, any questions, guys? Just leave them in the comment section. And I hope everybody has a good rest of the weekend and a safe trading week coming up. And I will talk to everybody next week. All right, guys. Thanks.